Right, guys, we've got some interesting setups for this week, particularly on Aussie pairs. We've got the Aussie pairs here, several of them this week, and it is the weekly trading plan. My name is Dima. Thank you for joining me. Let's go through the setups we have this week, some things I've outlined. I'll also look through the calendar on our list for this week. It is a new week. It is also NFP week. It is also a new month, December, the last month of the year. Typically, it is the shortest month, meaning least volatile because we only have the first 2 weeks. The second 2 weeks are in the start of the holiday season. Things are expected to slow down. On euro dollar, we've got both directions pending. Dollar CAD, same thing. Euro yen, the bias is up to buy. Aussie yen as well. Aussie CAD also buying, and Aussie New Zealand also. And then S&P 500, US 500 looking to buy. And let's go through each of those one by one. And first of all, of course, we'll start with the calendar. Let's have a look what we've got for this week, NFP week. Today, Monday, we've got CPI on the Swiss, speech on the euro, yen, perhaps less of an important one. Tuesday, we'll really get into it. Here we are on Aussie news. We do have lots of Aussie pairs. Going to be paying attention to Aussie tomorrow. It might be a wise idea. Of course, it's during Asia session. We've got the rate announcement. We've got some dollar news later. And then on Wednesday, what do we have? Some big ones here as well on the CAD, another rate announcement. Dollar news, some more Aussie news, but that is small compared to the rate statement. And later we have a Swiss one, foreign currency reserves, dollar, and of course, NFP on Friday. So expect the market to possibly slow down a little bit Thursday, beginning of Friday. And the interesting days will be these days, Monday, Tuesday, Wednesday. Let's have a look at where we are so far on the dollar. That's where we usually begin. So of course, we're going to look at a new month. We need to look at the monthly candle as the last one has finished. And what do we see? We see that the month has closed bearish. And now typically if it's closed this bearish, we would look for a continuation. Now, before we look for a continuation, we want to see a better price, and the better price would be up here. And that is what we saw last week and the week before. We were looking at that. So let's see, the question here becomes now, are we going to get that better price, and are we going to head higher? And from here, now that we reach this level and retrace into the better price, or are we going to continue downwards? If you look on the daily, what you can see is unclear price action. We may go higher, we may go lower. So far, it is a lower low. However, we've got these highs, breaking structural highs to the left here, hinting that we may get that retracement. So let's see, we've got both directions. Guys, remember to subscribe and like this video. We're publishing these 3 times a week. Let's move on to the next one. What do we got? Right, this week we're going to start with the euro dollar. Now, we've looked at several scenarios in the previous week. These are scenarios we looked at. The market has begun to range, and being the inverse of the dollar, again, we have several possible situations. Now, how are we going to look at this? Well, we may have situation number 1, where strong dollar means weak euro, and then we have these targets to the left here. And the other scenario is if we have weakness in the dollar, we'll have strength in euro dollar. And remembering also that the Dixie, the dollar index, is made up mostly of the euro. It's a basket, but the heaviness of it comes from the euro, the bulk of it. Okay, we've got so far bearishness on the euro, and from there let's look at the bearish scenario. So the bearish scenario will be preferable, will be a better price and then head lower. I don't like selling from cheap price. That's the bearish scenario, and the bullish scenario would be this one that was outlined. Now, let's see whether we get either one. At the moment, we're kind of in no man's land. We have a little bit of a outline this level before. We also have another level up here. So this is a level I'd be interested to sell from, and then coming into one, low one, and then a low two down here. And then once we get here, we'll have to reassess and see what happens, whether we continue to go higher or break and invalidate this low. Of course, you want to see price action, merge with the price action, and the candles will give you the story. Right, let's zoom back out. That's the outlook on euro dollar. Now let's have a look at our next one. Next one is dollar CAD. Let's zoom out once again, start on the monthly. Month was very bearish, and in fact it engulfed the previous candle. However, we are overall bullish. We have taken the highs of the previous month. We have also taken this major structural high. So the possibility is that dollar CAD is still bullish, as is the Dixie, the dollar index. We saw that we could have that bullishness. If you could just have a look again, let's have a quick look. We were looking at possible bullishness to go to the upside to get a better price. So it's the same possibility with the dollar CAD. And then that means we're going to look at both scenarios. Now, how we look at both scenarios, let's delete, let's get rid of these previous markings. Need them. So two ways. One would be a break of this low would indicate continuation to the downside, and a break of this significant structural high up here would be the market telling us that it prefers to go higher. Now, until we have either one of those, it's not quite clear where we are going. We have outlined some levels here. We have a bit of a level here. And the scenario would be that if we have this option, the invalidation would be this low. If this does become the low of this week, and if it doesn't, it heads lower, then the invalidation would be the last high, which may be this one. So we have to really watch and wait. At the moment, as always, Monday, it's early days. We have NFP. We also have CAD rate statements. So two big news, major news on this pair, both for dollar and the CAD. So it's not often that it happens that we've got news on both currencies in the pair. So let's wait and see. Let's look on the weekly once again. And we really want to see a break to continue higher. And the question is whether we're going to continue and actually hit this high that we looked at earlier. Of course, the first high would be this major high. And do we break and continue, or do we go lower? We'll have to wait and see. For the moment, really not clear. And of course, as we said before, daily candles, daily closes are more preferable. They're the ones that give you the cleaner picture. Okay, Euro Yen is the next one on the list. We had these highs to the left, these major significant figures and profit points in previous weeks. As you can see, we've hit them. We've got the 160, 161 number, but 162, 163 has been hit. So all of those have been hit. And we have actually reached our target that we looked at before. Now, if we're going to continue higher, because we don't see any clear reversal price action, we still got bullishness, then the next high would be this, which is the high of last month. If we expect bullishness, what do we want to see? Well, we want to see a better price if the market is going to go bullish. Let's drill down into the weekly, and what do we have? Well, let's draw the fib. And with this fib, we can see that this 60.18 level is here. And now we can have a look at our zone. And with our zone, we can look to anticipate a possible engagement, possible entry with the market. So far, bearing in mind that we have the greater picture, which is the upside, we have still a bearish market. Therefore, we want to wait for that to turn around. Now, what are we going to see? Well, what we really want is we want to see a turnaround, some kind of break of structure. And once we have a break, I mean, it's very early days. As you can see, it's not on the chart. Nothing is there, but we are now going to anticipate and prepare for the scenario. So that's essentially what I'm doing. If that happens, we have this low. And if the market invalidates this low, then we'll possibly look to head lower. But so far it's too early to tell. We don't know. And we'll wait and see what happens. So overall, bullish until told otherwise by the market. And we let the market tell us what to do. And then this is the level. And now, as we reach into this level, let's see if we do get a turnaround. I want to wait for that confirmation turnaround, head higher, create a swing, and then move to the upside. And that will be the idea on Euro Yen so far. Too early to tell. Early days, very, very bearish at the moment. And wait and see what happens. We may get an invalidation here, and sometimes the market just likes to take out some traders and reverse. So if we have this happen and we move higher, we'll reassess what happens during the invalidation throughout the week. Okay, the next one on the list is Aussie Yen. Aussie Yen will be similar to Euro Yen, with Yen being weak. And what do we see on Aussie Yen? Well, looking on the monthly, bullish, bullish, bullish. We have our ultimate high up here. So we're looking for that high to be traded into, to be hit. We're now at the significant 98 level. We've got significant 99 level up here. And let's see if we trade through that. And then at the moment, and then reverse. At the moment, we have no reversal. We just have bullish price action. With that bullishness, let's go down into the weekly. And the weekly currently is retracing. And again, where we're going to look to? Well, we're going to look to a better price. Let's see where we see a better price. If you want to draw trend lines, you can draw trend lines. You can look to the level we've got here. Also got a level here. So better price would be 1 and 2. Again, we want to see some kind of clear reversal back to the upside. We don't have that yet. So it would look like this. It would look like possibly a retracement to get a better price, break back up higher, come back down to get a better price, and then we'd be interested in this sort of scenario. It may also be the lower case. So lower here, react, break, pull back, and then after a better price, the continuation. So far, it's too early. You may be seeing, some people may be seeing a kind of a wedge or triangle pattern, whatever the case may be. The bottom line is, want to see a better price. We'll wait for the market to tell us. If it just breaks higher and shoots higher without getting a better price, then so be it. We'll have to leave that one alone. So those are what the probabilities I'm looking at. And these are just idea. Always manage your risk. Remember to match it up with your chart. Okay, make your own decision, guys. You are in control. Let's go now to Aussie CAD, another Aussie pair. And again, we'll have bullishness on Aussie. Let's see how the rate statement release will happen. But for now, I'm going to stick to the bullish idea. Previous month, we are now here in December. Previous month was bullish. As you can see, November, we're going to look to the continuation bullishness. Looking down at the weekly, we had a very continued bullish action and still looking to hit these highs. Now this is the clean high up here, so we'll look at that. We're breaking through the 0.9 number, whole number, we're getting a bit of resistance here. And now let's see whether we can break through that. Now, interestingly, we had last week, right at the end of the week, if you followed along in the previous video, the Aussie CAD came down into the cheaper price and then reversed and created this bullish price action, very bullish. And just to end the week, we looked at this area to trade into. Now we just about missed that, unfortunately. So if we head into it again, that will be really preferable, especially with the news, and the invalidation will be this significant clear low. So expecting bullish price action, expecting the continuation, and this is exactly what has happened, this swing, and now heading higher. And here's that next level, 0.906. So that's the idea for Aussie CAD. We have our invalidation at the low and wait for the market to do its thing. It is choppy. We're here at the 0.9 number, so the probability is a little bit reduced, but going to stick to plan. And as we were saying before, that's what happens around these big figures. Okay, next one. An old favorite that we've been looking at for a few weeks, if not about a month, Aussie New Zealand. Now, not a favorite usually, but a favorite in terms of one that we've been monitoring. Let's just remove all of this and look at what the price action is showing. We had this bullish move engulf previous 1, 2, 3 candles. This is the momentum move up. Now, the previous month, the whole of November was bearish. That is how it turned out. And this is, therefore, we're looking at this as a retracement. With this being the momentum move, we come back, this being the low, and all of this being the retracement price action. We waited for this level. We have now reached into this level, and now looking for that reversal. Let's now remove the previous markings. We don't need that. We leave the zone. We have our invalidation point down here. And now we're looking for the continued bullish scenario. And the continued bullish scenario would be this, higher, getting a better price, and then looking for the next levels. Now, obviously, the nearest next levels will be this obvious high and then the next high there. If this invalidation is broken through and we take that out, it is possible that we may look to lower prices. But let's wait and see until we get there, especially with the Aussie news. It may trigger this idea, may create a bullish price action. We may come down and hit the low again. I don't know. But in either case, come down. The moment we are ranging, we had this sharp move down and then sharp move up, which indicates a possible reversal. For now, still a little bit indecisive. Let's wait for the break, clean break, higher. We have this lovely, clean, smooth zone with many, as you can see, this is a nice clean zone. And that means that once we break through it, the probability is higher to go to the upside. We've also got, if you want to draw a trend line, but really all of this is not really necessary because we have our reference points here and the plan in place. If we hit this invalidation, and so be it, we'll look to see what happens. However, the major low is this swing point here. So if we invalidate or reassess this scenario, but the ultimate low we don't want to be broken is down here. So we'll keep reassessing until we break this low. If we break this low, then this whole idea collapses. Yeah, just being flexible. It's the name of the game. Be like water, as Bruce Lee said. Let's head back to the monthly. And here we are. And that low that we looked at is the low of October. Okay, hope that's clear. Do match it up with your chart if you have any questions or doubts. Let's now look at the next chart. Remove the markings, zoom out, and we could see the S&P 500, US 500, whatever name you want to call it. What have we got? Well, looking on the monthly, previous month has been very bullish. Took out two structural highs, 2 months of highs, and it is now clearer to see that we are more likely heading to these ultimate highs up here. So let's mark out these highs as the target points. We can now remove the previous markings. We're no longer looking at the downside. And now we are clearly heading higher and higher. Previous weeks have been very bullish, bullish. It's quite overbought, if you want to call it that. I'll just call it expensive. It's preferable to see a better price. And I don't know whether we'll get a retracement or not, but we'll go with what we see so far. And what we see so far is just clear bullishness. And Friday closed bullish. Therefore, we may see this level down here. You want to zoom in. Let's zoom in. Here we are. In this level with this low being created. Therefore, this had become a validation point, and we now are in fact at an interesting level, because this indeed is a level, then we'll look to go higher and reach our next target points. So there are target points here for 620 and for 636. Depending, these prices may not be the same as your broker, by the way, but these are reference points for my chart. And we'll see if we get a reaction. Now, if you want a safer, so to speak, idea, then you may want to look to the 1 hour chart, and this being the validation. So if you don't want to take a risk at buying at a low, then you can wait for this idea, which is the break of the high, pulling back, and then continuing to the upside. So obviously that will be on a lower time frame. You'll have to watch for that and look at it more regularly. For now, this is how we see it. If invalidate, then we may come down and hit other lows, these lows. So we got 1, got 2 looking to the left, and we got 3 down here. So that's the other possibility. We'll have to reassess. If it gets invalidated, then this low price will become the more favorable option. Again, we'll have to wait to see what the market tells us. We could say it's overbought, we could say it's expensive, but so far it is still bullish with no clear sign of reversal, unless we invalidate this low, we head below this low, and then we'll have to reassess and see whether we reach into lows down here and get a cheap price after this big fat run up. Generally, when the market tends to have a very, very big run, it does like to take profit, to retrace, whatever word you want to use, and create a temporary, if not a long-term, reversal. So far, we don't want to anticipate the reversal until we see a clear sign that it will do that. And so far, we don't have those signs, so that's why not considering it for now. Zooming out on back into the daily, we've got these highs. Just mark it a bit cleaner. Yeah, again, from here to here, we have about 42 points or so, whole numbers of the S&P. So that should be big enough for a trade. However, just caveat is the fact that we have so many bullish weeks without a retracement. So maybe this week will be it, maybe not. Again, it's NFP. The preferable days to trade on NFP week is Monday, Tuesday, Wednesday, and non-NFP weeks are Wednesday and Thursday, as we really get into the meat of it. Yeah, got to be flexible and adapt. For now, this is what the market is showing. Okay, zooming back out to the weekly, and here we are back on the dollar. Again, let's see what happens on the dollar, whether this is high is cleared and we get strength. If you want to get more clues for the S&P, strength on the dollar is usually bearishness on indices and vice versa. Bearishness on the dollar is usually strength on indices. So if you match up and correlate it up, if you see highs being broken on the dollar in terms of correlation, you more likely will see lows being broken on S&P, and you will have a cleaner bias then. Okay. So that's something to watch for. That's another little tip if you want to increase the probabilities of your setups. All right, guys, that is it for this week for the plan. Always manage your risk. Thank you for joining me. I'll see you in a couple of days, and bye for now. Good luck in your trading week.